Hello and welcome to the US Open with Shanti. As you can see, I'm not Shanti, I am David Madden. My colleague Shanti is on a well-deserved holiday this week, is on annual leave, and I'll be filling in for today's webinar. For those of you who haven't spoken to before, my name is Dave Madden. I'm a market analyst here at Equity Capital in London. Equity Capital is as part of the overall equity group, which of course includes FX Pesa in Kenya and also Equity Nigeria in Nigeria. Now, the first chart I'm going to look at here, first chart I'm covering here is going to be silver. Silver has been, I've seen a lot of volatility in the last week or 10 days. The metal fell to its of just over 2 Fridays ago, the metal fell to its lowest level in almost 2 years. Why was this? Well, we had a broad rally in the US dollar. We also had concerns about the health of the global economy. And with that, we saw a sharp move to the downside in silver. But since then, we've seen a fairly large rebound in silver. We can see a series of higher highs and higher lows along the way. In fact, only yesterday, in the past 24 hours, 48 hours, we've seen silver rise to a level last seen about 2.5, 3 weeks ago. So we're looking at the price action here as silver, while it continues to hold above these two simple moving averages, it's likely the medium-term upward trend will continue. If we do look to continue on from here, where can we target? Well, we could be looking to target this region here around 22.65, and a break above that could see a target this zone here at 23.26. Now, if we do take a close look at the price action in the past 12 to 24 hours, we can see silver has retreated from its recent peak. Looking at the MACD indicator, we can see that momentum is in negative territory, indicating the bears are in control. So if we do see continuation of the short-term downward move in silver, where can we go? Well, we could target 21.26, and a break below that could see us down towards 20.83. Now, what's been going on with silver recently? In the more recent, the last few sessions of silver, we've seen a very weak US dollar, and a weak US dollar typically helps silver. Why is this? Well, silver, like other major commodities, is traded in US dollars. So when the US dollar is weak, that typically helps. When the US dollar is weak, that typically helps silver, and when the US dollar is strong, that typically hurts silver. What we've also seen in the last couple, a bit of on again, off again, is in relation to overall risk on, risk off sentiment. Overall, we're in a bit of a risk-off mood in today's session, which is why we're kind of off the peaks of yesterday. But yesterday we saw quite a strong move in both stock markets and commodities around the world yesterday. Essentially, if people are kind of optimistic for the health of the global economy, typically stock markets and industrial metals rise. If people are concerned again for the health of the global economy, you typically see declines in industrial metals and also in silver. What's been going on the currency markets? Well, I talked a moment ago about how the US dollar was quite well, more recently has been weak, but only a week or 10 days ago was quite strong. So we can see here, euro dollar had a major decline into the middle of May. Back then, on the 13th of May, I believe it was, euro dollar fell to its lowest level in 5 years. So it really kind of highlights how bearish that was. That's because overall sentiment was quite hawkish and optimistic from the US. But since then, we've seen a reversal. People have taken their profit on the US dollar, and we've seen the US a broad pullback or weakness in the US dollar. And at the same time, in the last few days, we have heard from the European Central Bank's chief, Christine Lagarde, and only yesterday she gave quite a strong hint the European Central Bank might look to hike interest rates in the third quarter. Already we've had a number of central bankers in the Eurozone suggesting we could have a rate hike in July. So a combination of people taking profit on an already strong US dollar, a combination of people, say, bargain hunting for a cheap euro dollar currency pair, and then throw into the mix commentary from Christine Lagarde, the head of the ECB, indicating we could move out of negative rates by the end of the third quarter. So with that, we've seen a sharp rebound in euro dollar. We can see a textbook example of an uptrend, a higher high, a higher low, a higher high, a higher low, a higher high. In fact, in the last few hours, we've gotten back up to a level last seen in late-ish August. So April rather. We're essentially up around a 1 month high on Eurodollar, which says a lot considering it was only about 10 days ago we were at a 5-year low. So it's quite a swing, isn't it? Going from, and on the 13th of May, the middle of the month, from a 5-year low to a 1-month high. So if the currency pair continues to hold above these 3 simple moving averages, it's like the more medium-term upward trend will continue. A rally from here could see a target 1.0814, and a break above that could see a target 1.0935. It is worth noting, though, although the price of the currency pair has been moving higher recently, if you take a look at the MACD indicator, we can see that momentum is in positive territory, but positive momentum is in decline. So it's almost as if the bulls are kind of running out of steam. Looking at the RSI, we can see that it's overbought. It's in overbought territory, so the upward move is kind of overstretched, if you were. This could be these two indicators could be telling us that a change in trend might be in the offing. There are no guarantees, but this is what could be what could be the case. If we do see a move to the downside in euro dollar, where could we go from here? Well, we could head back down towards this simple moving average here, which comes to play at 1.0614, and a break below that could see us back down toward this low here in at 1.0532. One of the kind of major themes of markets recently has been the kind of risk on, risk off mood, particularly on the risk off side. We've had concerns about high levels of inflation, central banks hiking interest rates, which will add to the cost of borrowing, which will compound the inflation issue. The post-pandemic boom is long and truly over. And all people are wondering, what's the global economy actually going to look like? We have there's headlines about cost of living crisis, food shortages, all these sorts of headlines doing the rounds. There are fears that economically, on a global basis, things are going to get worse before they get better. So with that, we have seen an overall risk-off mood. Essentially, one of the kind of biggest decliners amid the overall kind of risk-off mood has been the US tech sector. The US tech sector has relatively high levels of debt compared to traditional sectors, be it, say, retail, for example. So the fact that we've already had 2 interest rate hikes from the Federal Reserve, the US Central Bank, in the last few months, and there's talk of another rate hike next month. Who knows? It might even be another large rate hike of 50 basis points. With that, we've seen an aggressive move lower in US stocks, and in particular US tech stocks. Now, so with that, it was only last Friday the US 500 fell to its lowest level in 15 months. In 18 months, really, which really kind of highlights how bearish sentiment is. Now, with that, while we continue to hold below these 3 simple moving averages, it's likely the broader bearish trend will continue. Moving north from here, we could look at the target 11,490, and a break below that could see us back down towards 11,400. And then if you go below that, the next big level to watch out for will be 11,200, and then 11,000 itself. Now, looking at the price action in the last 24 to 48 hours, we have seen a bit of a rebound. Now, granted, we've handed back some of those gains, but if you look at the price action in the last few weeks, we have seen a number of occasions where we have enjoyed relatively large rebounds, such as here, here, and also here. Now, if we manage to kind of hold above this low here, the 18-month low at 11,490, if we fail to drop below that level, that could be the kind of early indication that the market's going to turn around. And should that be the case, if you can manage to hold above 11,490, and we do see the market turn around from here, we'll work with potentially target to the upside. Well, the first place I'll be looking out for is this moving average here, which is the 100-period moving average. By the way, this is a 4-hour chart that I'm looking at in terms of time frame. All the charts I've been looking at so far, and I will look at, are 4-hour time frames. And it's a 100-period moving average that comes into play at 12,435. It's worth noting that the 100-period moving average acted nicely as resistance here in early May. It's also worth noting that same metric acted as resistance here in late April as well. So, as I often say, if a metric has been of importance in the past, it makes it more likely to be of importance in the future, but there are no guarantees. If we do manage to break above that moving average and break above 12,000, the region of 12,435, where can we go to from beyond that? We can then be looking up toward this zone here in around 12,927. Sticking with the theme of US stock markets being under pressure, we can see here that the Dow Jones has also been in a kind of a classic example of a downward trend, a series of lower lows and lower highs along the way. In fact, the levels we saw only in the last couple of days, I think it was on Friday, it fell back to a new 14, 15-month low. So it's no coincidence that the NASDAQ 100, the tech-heavy index, fell to an 18-month low, where we're also seeing not quite to the same depths, but we're falling back to levels last seen in say February 2021. So it's been kind of a 15-month low was set on the US 30 only a couple of days ago. So that really speaks to how bearish the much wider sentiment is. More recently, we have seen a bit of a rebound, but traders are now asking themselves the question: the rebound that we've seen here, is this going to be a short-term rebound before the market falls lower yet again, like it's been doing for the last several weeks and months? Or are we going to see an actual proper protracted and well played out reversal and actually eventually shake off the kind of broader bearish trend? Now, look at the price action here. The size of the rebound hasn't been that impressive. We've managed to reclaim the 20-period moving average, but we haven't managed to actually properly break above the 50-period moving average. While we continue to hold below these two simple moving averages, the 50-period moving average and the 100-period moving average, I suspect the broader bearish trend will continue. We've already retreated a little from the recent peak. We can see there's a steady decline in positive momentum, indicating that the bulls are kind of running out of steam. So if we do see a continuation of the short-term downward move in the US 30, where could we go? Well, we could target this region here at 31,297. And a break below that could take us back down to the recent lows, which were kind of 14, 15-month lows at 30,637. Now, on the other hand, if we do manage to kind of hold above the recent this area here, are kind of 31,297. If you can manage to hold above that, and we can kind of build a bit of a base in around this zone and move higher from here, where can we look to target? Well, the first area I've been looking out for is this peak here, the highs of mid-May rather, in a 32,753, and then a break beyond that could see us up toward this zone here around 33,057. Now coming on to the Australian dollar. So the AUD USD has been in a lot of focus recently, largely because of the, well, until 10 days ago, the strength of the US dollar. A similar situation with euro dollar. We saw a sharp move to the upside in the US dollar up until the 12th or 13th of May. Since then, we've seen a bit of a pullback in the US dollar as traders have been kind of banking their profits in the long positions. That helped push up the AUD versus the USD. So we've seen a bit of rebound in that currency pair. What's also helped to a certain extent is the last few days is the rebound in metal prices. You know, Australia is a very much commodities-driven economy, particularly hard commodities, industrial metals. When metal prices are strong, the Australian dollar tends to be strong, and when metal prices are weak, the Australian dollar tends to be weak. So we've seen a bit of a rebound in metals, and we've seen certainly a pullback in the US dollar. So this has all led to a strong upward trend in recently, whereby we've seen a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and so on. So in fact, in the last 24 hours or so, we've seen AUD USD hit its highest level in about 2.5, 3 weeks. So we went from its lowest level in almost 2 years to a 3-week high quite quickly. So, and with that, while the currency pair continues to hold above these three simple moving averages, it's like the more kind of medium-term upward trend will continue. A rally from here could see a target 0.7265, and a break above that could see a target this area here at 0.7376. Now, looking at the price action in the past 12 to 24 hours, we have seen a pullback in the AUD USD. Are we going to see a continuation of the short-term move, or is it just a kind of a short-term move before it kind of slots back into the more kind of medium-term upward trend? Now, looking at the MACD indicator, we can see here that momentum was swung from ever so slightly being in positive territory to ever so slightly being in negative territory, indicating that the bears are now in control. So looking at the RSI, it's actually been kind of tilting higher the last few hours, suggesting the price bias is the upside. But if you do see a continuation of this short-term downward move in the AUD USD, where can we go to? Well, I've been looking back down towards this simple moving average here, which is the 50-period moving average. You can see it acted nicely as support here. It acted as a support zone here, and actually, in fact, a resistance zone here and a resistance zone here. So whenever I'm focusing on a certain metric, be it a moving average or a trend line or a resistance zone or a support area, I try and look at how many times that metric has been of importance in the past, because the more a metric, in this case, it's still a moving average, the more a metric has been of importance in the past, it makes it more likely it will be of importance in the future, but there are no guarantees. So if we do drift lower in the AUD USD from here, where can we move back down towards? Well, we could move back down toward this area here at 0.7027, and a break below that could see us back down towards this area here at 0.6948. I am going to look to wrap things up now with the live update, with the with the US Open webinar. My colleague Shanti will be back on next Tuesday. I will be hosting my own webinar, as I do every single Thursday evening. It goes out at 8 o'clock Kenya time, and it goes out at 6 o'clock Nigeria time. So I'll for those of you who want to catch up with me for another live event, and I'll be happy to host you again. Before you go, I just want to quickly say if you can contact me on Twitter. Here is my Twitter handle here. It is at dmadden_equity. At dmadden MADDEN_equity EQUITI. Obviously, I can't give any advice or actually explicit trading strategies, but I can provide commentary on what's going on in the markets. Feel free to get in touch and say, would you mind commenting on this chart here, be it euro dollar or be it silver or whatever it might be. So I will look to thank you for those who've tuned in and also who watched the recorded version. I'll be looking to sign things off now. So everyone, have a good day and have a good trading week. Thank you very much.